From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May 9th, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to be doing a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. The news calendar for the first few days of this week is relatively quiet, but we do have some events later in the week that could spur some market movement, and you'll want to make note of those on your financial calendars. So let's get started here today with the USDCHF, the US dollar, versus Swiss Franc on the daily time frame. Over the past several weeks, we have been studying this downtrend channel in the live daily trade room between the two red trend lines. You can see the two trend lines on the daily time frame. Within that pattern, we see the fall, the rise, the fall, the rise, the fall. And over the past couple of weeks, we've seen a rise, another fall, and another rise. We've had opportunities to buy on each dip down here towards the bottom of the trend channel, the bottom of the red trend lines, and had opportunities to see profit. Even last week, taking buys on clues and evidence of reversal and profiting quite nicely on the rally late last week. Let's go ahead and zoom it in here on the daily time frame again. The dip last week, leaving this hammer candlestick down here at the bottom, began buying right here into the mid-9500s and profit made as it rose towards the 9700 level last week. So nice opportunity there. This is not the opportunity to go long again here on the Franc. Take a zoom in. You can see historically we've seen resistance and congestion inside this yellow zone between 9720 and 9750. We might adjust that a little bit later on in the trade room today, but I think at least right now it tells us that we don't really want to take a long or buy scenario as long as it's underneath that yellow zone, because that's clearly our resistance level. So let's go ahead and highlight that and put a downward facing arrow. So this is resistance. Don't want to go long there. But if you're going to go long in a bullish market movement, you want to typically go long on a at a support or on a dip lower. So the first place that I would point out is here at 96.75, 96.50, the blue shaded area here on my chart. You can see resistance back here with this little blue oval is, and you can see support back here on the left. So if we're going to go long, we'd actually prefer to see a little bit of a dip down there to the blue zone. Now going short, there's no real reason or evidence for going short quite yet, but definitely becomes an opportunity if it challenges and holds and sustains and gives us clues to resistance and reversal at the resistance level. So we'll watch the yellow zone, maybe a push back underneath the blue zone begins to give us a change in that momentum, but at least right now, I think as long as it's above the blue zone, we continue to focus on buying this currency pair. Down to the 4-hour time frame, we zoom it out a little bit. There it is right there. Look at that support on top of the blue shaded area. So if we're going to go long, I would prefer to do it as close as possible to 96.75, the blue shaded area. Once again, that becomes the opportunity to go long. Maybe a dip down to the pink zone, maybe a fall all the way down here to the green zone, but at least at this point, I don't think there's enough momentum to get us down there. So buying towards the blue zone becomes a potential opportunity if it holds as support. We don't want to go long under the yellow zone, but maybe a break above this yellow zone. Getting above here may give us another opportunity for the U.S. franc. Moving on to the euro dollar, similar yet opposite situation. Last week we had opportunities to go short here on the euro dollar on rallies into the resistance. I just really need to take a quick peek out here to the weekly time frame, show you what we've been studying in the live daily trade room. Previous downtrend, red box as the long-term range since January of 2015, almost a year and a half now, been stuck within this red box down here at the very bottom. That's important as we get down to the daily. There's your red box, and there's where we challenged last week, giving us clues and evidence of reversal. We saw the shooting star candlestick here, giving us a clue to resistance and reversal. We started looking for selling opportunities right around the 1.1500 level last week, profiting as it pushed back down towards 114. So a nice opportunity last week. Again, just the opposite of the U.S. franc. You don't really want to go short into support. Right now it's at the green shaded area, right around or just underneath the 114 level, into the mid to upper 113s. Not your best opportunity to go short. If you're going to go short, one of two things needs to happen. It either needs to rally back to the pink zone as resistance towards 115, or probably needs to break underneath this green shaded area. Let's go ahead and take it down to the 4-hour time frame. Look at the congestion that we're seeing there into that green shaded area right now. Again, if it's going to go short, it's going to need to break underneath there. If I zoom out one time here on the 4-hour, look at the congestion back here. So we need to get underneath there if it's going to go down further for the euro dollar. We do see that the Forex Black Book has switched over to red, giving us some hints of bearish momentum building back into the chart. We'll continue to watch for further evidence of that, but selling, at least at the current moment, becomes mainly the direction we're going to focus in on. We need the breakdown under underneath the green zone, or a rally back into resistance to give us a confident opportunity to trade the euro dollar. Moving over to the GBPUSD, of course, last week we saw the bears moving in. We had 3 pieces of key negative data out of the UK last week that caused this fall back down last week. We had opportunities to go short and profit down towards the blue shaded area into the 144 level. So really nice moves last week. I think, again, if you're going to go short, it makes much more sense to do that into resistance. At least right now, that becomes close as possible to 14500. We sold that many times last week into the 4500 level and made significant profit several times. Sitting on top of the blue shaded area clearly is not your opportunity to go short, because that is your support. You can go back in time and see lots of decisions made to buy, sell, enter, or exit at that blue zone. Let's go ahead and take it down to the 4-hour time frame. Again, we took multiple opportunities to go short into the orange zone, profit all the way down to the blue shaded area. If you were following along last week, you should know that. Again, don't go short on top of the blue shaded area. 2 opportunities to go short, back to the orange zone, or finally the breakdown underneath that blue zone in the 4400 level. So it needs to go up before it goes down, or just break through this barrier here before it goes down. I don't really think that there's any significant reason to go long right now on the GBPUSD. Moving over to the USDCAD, we saw a little bit of a shift in the pattern. We've been studying this downtrend pattern underneath the red trend line for several days and weeks and months now. The black boxes, all the boxes underneath that red trend line, show us the pattern: congestion, support, breakout on the way down within the trend. Last week, we saw a little bit of a change in that pattern, spurred on initially by the cut of interest rates out of Australia. And we saw a little bit of a dip in oil prices last week, and continued some further negative data with jobs late in the week. So some interesting things that we saw last week caused the rise for the USCAD. Could we be seeing a change in the trend? Could we be seeing a momentum shift? Possibly, but I think it's a little too soon to really call it like that, because literally it could just turn around on a moment's notice and start going back down. Let's go ahead and zoom it in a couple of times here on the daily time frame. At least right now, we know that we don't really want to go long. Take a look at the orange shaded area down here at the bottom of the chart, the orange or dark red colored shaded area, whatever color you want to call that. This area right here is what I'm looking at. Look at right now, we're into there as resistance into that orange shaded area. That's just underneath the 129.50 level. Follow it back in time, you see resistance here, congestion here, support here, support here. So I don't think that this is a good opportunity to go long as long as it's underneath 29.50. Only if it breaks above 29.50 would we begin to look for this currency pair to go long. Let's go ahead and take it down to the 4-hour time frame. Look at the congestion in here inside that orange shaded area. Let me zoom it out one time. Just finding congestion there. I think, at least for the day today, the best opportunity would be a wait for a breakout of that congestion, either above it to continue the upside, above 29.50 as mentioned before, or below 2900, 2895. If it gets underneath the orange zone, we could look for it to go lower. So at least here at the beginning of the week, I think it's pretty clear. We wait for a breakout outside this little orange shaded area here before we look for a new trading opportunity for the US CAD. Moving on to the US yen, in a similar situation, we've been in a downtrend. It's been clearly bearish here for this currency pair. We touched down into the lowest multi-month lows that we've seen for quite a long time, into the low 106s late last week, and started a little bit of a bullish run here for this pair. The question is this going to be the turn and switch to an uptrend, or is this just simply a pullback and we look for the return of the sellers? And I think it's, again, a little bit too soon to tell. A couple of clues that we might look for, though, are, of course, price action. That indicates bullish price action, rising lows, rising highs, change in the trend pattern. I think we might be beginning to see a little bit of that now. We see that the Forex Black Book has switched over to green, giving us a clue to maybe some bullish momentum. But again, I say this quite often in the live daily trade room, you want to buy at a lower point. It always gives you your best investment if you're going to go long or buy a currency pair. I think at least at this point, it would be much more prudent, I think, to even wait for a dip back down here to the blue shaded area. If we begin to put a trend line on the lows here, we can see that would be back down here towards this blue trend line as well. So a dip much lower, maybe back down to the blue zone, the blue trend line, becomes a better opportunity to go long and buy this currency pair. You really don't want to buy it at the highest peak that it's been for at least the beginning of the week. Fibonacci from the highest high that we see up here down to the lowest low also puts the 382 at 107.96, 10800 just down here to the green zone. At minimum, you would probably wait for a push back down on top of that 382, the green zone. You can see some support back here on the left before going long once again. So at least right now, not a good opportunity, not a good moment to go long. Wait for a pullback, maybe a break of the 108.40 or so level, but I think a pullback will give us a much better investment price for our trade. Moving on over to the AUD, clearly a downfall last week. We saw the cuts of interest rates, monetary policy causing this currency pair to clearly be bearish now. So that's the direction I think we need to focus our efforts in. But again, it's all about waiting for the right timing. You never want to go short or sell something at the very bottom. It just doesn't make investment sense. You know, remember old buy low, sell high. If you're going to sell something, you don't want to sell it at the lowest price. You want to sell it at a higher price. So I think at least at this point, we have to wait for it to pull back. Maybe the blue shaded area, maybe the orange shaded area as it goes all the way back up underneath the range that we saw here in the historical supports back into the low to mid 7400s. Has to pull back before it goes back down to give us a better investment. Sitting on top of right now, by the way, the 100 period moving average here on the daily time frame. So again, not really your best opportunity to go short. In fact, right now we're at support. We could be watching for some intraday clues to support and reversal. Not there yet, but definitely something to watch for. Push underneath here, let's say underneath 7,300, probably starts to signal the continuation lower here for the Australian dollar. 4-hour time frame's not really going to change it much, but again, it might give us a little bit of an earlier detection of potential reversal or a little bit of a bump rally higher. You see a little bit over the past several hours since market open, bumping a little bit higher now following. I again think it needs to go up before it goes down here for us to give us a better investment, or at least later breaking through 7,300 to give us that downside. Let's moving over to the NZD/USD. Similar situation. I think we've had the uptrend. We're starting to see potential evidence of reversal here. We've had the rising trend channel along the red trend lines here. We studied these rising trend channels, the trend pattern here last week. The fact is, last week we were sitting on top at the bottom of the channel thinking, hey, maybe there could be a point of reversal. Now it's broken through the 68.40, 68.70 level. So I think this becomes a potential opportunity to go short again here on the New Zealand dollar. Take a look back here, the blue box resistance, red circle resistance, a lot of congestion here. I might even point out this area right here as resistance right here where the black X is. So we've seen a lot of resistance there. That becomes our resistance today. 68.40, 68.70, the blue shaded area. Take it down to the 4-hour time frame. Take a look what's happened since market open. It dipped a little lower, rallied back into 68.40, and now holding underneath there as resistance. This may be our closest opportunity to trade right now on the New Zealand dollar. Let's say as long as it's underneath that blue zone, becomes a short opportunity to target back down towards the pink shaded area. You know what the risk is? The risk is that it breaks above the blue zone. So if this becomes a selling opportunity, our risk, our stop loss would be above the blue shaded area. So we know that. We know what the risk is. It would break above the blue zone. We know what the potential target is, the pink zone. So how do you make your risk smaller and your profit potential larger? I think what we need to see is a pushback 68.40, 68.50 inside the blue zone gives us a better sell opportunity to go short towards the pink shaded area for the New Zealand dollar this week. Interesting enough, again, the Forex Black Book has now turned red, giving us a bearish bias once again for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.